Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on the merger of Elemental Altus Royalties and EMX Royalty Corp into the new combined entity, Elemental Royalty Corp. Elemental Altus is traded on the TSXV under the ticker ELE and on the OTCQX under the ticker ELEMF. And EMX Royalty Corp is traded on the TSXV under the ticker EMX and on the NYSE American under the same ticker EMX. And eventually this will be trading on the big board as Elemental Royalty Corp under the ticker ELE in early November. We're joined by two gentlemen here today, Dave Cole, the CEO of EMX Royalty Corp, and Fred Bell, the CEO of Elemental Altus Royalty Corp. In the new Pro-forma company, Dave, you will be the CEO, and Fred will be the president and COO. So, Dave, I want to throw it to you first. Just a big picture statement as far as the combination of these two royalty companies, really the best of the royalty acquisition space with Elemental Altus and the royalty generation space with EMX Royalty Corp. Give us a big picture snapshot of the business combination here, Dave.
Well, Shad, it's always a pleasure to be on. Thank you very much. And in that regard, I'd just like to first say that royalties are phenomenal financial instruments, and I'm always amazed at how the concept of and the reality of optionality, discovery optionality, development optionality can affect the valuation of a royalty over time. And there's some phenomenal examples within our portfolio, but also throughout the royalty sector. And I know that you're a keen study of that and understand that very well. Within the royalty space, there is the portfolio effect. The greater the number of royalties that we all own, the more they're all individually worth. And this is a phenomenon that's well exemplified throughout the space. As the market caps increase, the PNAVs, the price of which we trade relative to our net asset value, also increases. And a good example of that would be Franco-Nevada and Wheaton Precious and Royal Gold all traded high multiples to their net asset value as calculated by the analysts, and looking at their in-ground value as their net asset value, right? So they typically trade at two plus, two or more times, two and a half times. There's been times in the past when they traded over three times the calculated net asset value on a per share basis. And Fred, who has a great company, and EMX, we were both trading at discounts to our net asset value. And one way to combat that is to combine our portfolios, enhance market awareness, enhance market liquidity, which then facilitates decrease in our cost of capital and increase in our capital availability moving forward to be able to build our portfolio. So those are some of the fundamental reasons why merging makes sense. Although from our perspective, the most important thing is to have teams that work well together. And we've had the opportunity to get to know Fred and his team for a couple of years now. We've syndicated royalty purchases together. We have also looked at other opportunities numerous times that we failed, did not purchase, which is an important part of our business, by the way. Failing opportunities you do not want to buy, a very critical part of our business model. And we have a lot of mutual respect. Really enjoy working with the guys at Elemental. I'll point out that we've shared a director in the past. So there's been very good communication with us. And it makes complete sense for us to do this. And the catalyst for us to do it now, because some people say, well, why didn't you do this a year ago, right? And the catalyst is because Tether came in and became a large shareholder in Elemental, and their enthusiasm for investing in the royalty space is infectious. And I met with Juan, the representative from Tether that is now the chairman of the board for Elemental. And we had a great meeting. And we said, we've been talking about this for over a year. Let's do it. And we said yes, is the short answer to the equation. So the real benefits: enhanced liquidity, enhanced capital availability, and enhanced portfolio effect. And when I speak to that, I'm talking about the discovery optionality within this portfolio. The more royalties we own, the more money's going into that whole portfolio on behalf of our counterparties to our benefit, creating that potential for new discoveries to be made across that portfolio. And that's prolific. There are discoveries being made all around the world. And the other thing that I like to point out is the mine development optionality, or the fact that these operators around the world are investing in hundreds of millions of dollars annually into building new infrastructure to be able to enhance production. That's all to Fred and my benefit.
Absolutely. I think that's a great summary, Dave, of, the increased liquidity, increased capital, increased visibility, the two teams having the synergistic work environment already and sharing a director, but sharing a same philosophy, but also all that discovery optionality embedded in the portfolio. It takes the portfolio of assets, just for those listening in, up to 16 cash flowing royalties, 31 advanced development royalties that are moving down the pipeline towards production, and a total of over 200 royalties and still plenty of optionality in the projects that are held to even create more of those. So a lot to dig into. Fred, I'm going to throw it over to you next as far as getting into the nitty gritty of the detail of this transaction. As Dave mentioned, and we've talked about this before, Tether coming in as a key stakeholder in Elemental Altus was a catalyst here, but there's a lot of questions about you're going to be doing a share rollback along with this financing that you've announced, along with an uplisting to the big board, and also the integration of Tether Gold into the mix on the balance sheet. So there's a lot in there to dig into, Fred. But from a big picture standpoint, walk us through this transaction, the financing, the share rollback, and the eventual listing on the big board.
And can I just say, Shad, I think Dave spoke to the merger and the combination and the outlook and strategy. I think he spoke to that very eloquently and very succinctly. So if you want to recap on that for anyone, I would actually advise listening to the last couple of minutes because it was probably the best summary of it we have given so far. But look, in terms of where we are as a combined company, you're right. We are in parallel with the merger. We announced the share consolidation just over a week ago, and we are in parallel progressing the US listing that we expect to happen in October, and that will be prior to the completion of the merger, which should happen in the first half of November. So we've got two acquisitions, one of which we announced 2 days before the merger, one of which we've already closed. The second will be closing after the combination completes. We have the US listing that will be a really major catalyst for the combined company going forwards, and that will happen in October, and then the merger in November. So there is an awful lot going on behind the scenes over the coming weeks.
Well, and just one other thing that some people have sent some questions in about is when we talked about Tether, just to clarify, there's the Tether, the stable coin that is tied to the US dollar. There's the Tether Gold, which is backed by gold. And then there's Tether Investments. Tether Investments is who actually came into Elemental Altus as a stakeholder, and that's where Juan came from as the chairman. So it's really their money that they're placing into the royalty business. But you've also introduced the idea that you could hold some Tether Gold on the balance sheet just as an efficiency of capital. So could you maybe speak to that too, Fred?
Yes, you're right that it is Tether Investments that has the holding in us, and that is Tether's private capital that they are investing. And in terms of what we did with opening up an account to hold Tether Gold was it really came about, I think for the first time at the beginning of this year, Elemental Altus had increasing amounts of cash on the balance sheet. And if you rewind to the beginning of 2024, I think we had $25 million of debt that we were carrying, and we paid that down over the course of the following 12 months. And we got ourselves in a position where we had increasingly large amounts of cash that we were holding on the balance sheet. And we'd talked internally in the past about whether it made sense to hold a portion of that in physical gold at times, where we can give our shareholders, who are generally constructive on the view on gold, we can give them increased exposure. And I think the combination of that conversation happening with us holding increasing cash on the balance sheet and Tether coming in made it actually a very good way for us to hold that going forwards is if we do holding it through Tether Gold. And the reason for that, part of the rationale for that is frankly, it is the cheapest and most efficient way to do it. And so it was a pretty neat alignment there, being able to put something in place that if we end up in a position where we'd like to hold some physical gold, we can do it through Tether Gold and we can do it very quickly, efficiently, and at incredibly low cost.
All right, I appreciate you breaking that down. Just had a couple questions on that. Dave, I want to bring in the concept of how Elemental Royalty Corp, the new combined pro-forma company, really fills an important gap in the royalty space. And you have this in your slide deck, but I think it's a fantastic point that there's really not a lot of mid-tier companies anymore after the wave of M&A that we've seen the last couple of years in the sector. You have the big boys like Wheaton Precious Metals, Franco Nevada, and Royal Gold. And you have some large mid tiers, but they're getting very large. Triple Flag and Osisco Royalties, or OR Royalties now. They've renamed the company, but they're at a $5-6 billion market cap. And then there's about a dozen companies sub 1 billion that are all jostling for position down in the junior space. By combining Elemental Altus and EMX Royalty together into Elemental Royalty Corp, you really fill that interesting gap. So maybe speak to the position you're at as an emerging mid-tier and what kind of deal flow that allows you to do.
Well, Fred and I definitely want to separate ourselves from the sea of mid-tier royalty companies, given the metal that we have in our portfolio. But I will make another comment that you might be surprised by, and that is that, quite honestly, I'm not concerned about whether or not I fill a gap in the market. That's the kind of thing that bankers talk about, and they think it's cool. And we get asked this question quite often. That's not why we're doing this deal. We're doing this deal because it's accretive to our shareholders and because it positions us to continue to grow this company astutely, because our objective is to allocate capital appropriately, right? And to have that capital available to us at a reasonable price to be able to build this portfolio through the mechanisms that we have done so for over 20 years. And so, sure, it sounds fun that we're filling a gap in the market cap of royalty companies to invest in out there. That's not, I mean, it's a fun little point, but it's not germane to why we're doing this. And to be honest with you, I'm not sure I care about that.
Well, the only reason I bring it up, Dave, is that some investors care about it. Like
Sure.
personally, I like to see
Yeah.
that you guys are filling
Yeah.
that void because it gives me a different choice. But I guess the question was about the kind of deal flow you can do now on an acquisition basis. I know you have the generation side of the business, but you could actually approach deals that are too big for some of the smaller companies, but maybe not germane to the big companies. So could you maybe speak to that?
Yeah, I do. Another way to say that is that we'll have bigger arrows in our quiver so we can hunt bigger game. And that is important. And it comes back to doing astute technical work, marrying that with our business acumen to be able to allocate capital right and grow this portfolio. And Fred's company's done a fantastic job of that. DMX has done a fantastic job, and we'll do an even better job married together. And particularly when you take into account the backing from Tether, which is a very interesting and fascinating, well cashed up private company.
Well, and one more, Dave, I want to just throw at you. I know you've
Sure.
gotten this question a lot, but people have sent in probably a dozen questions to me asking about the generation side of the business that EMX is really the pros at. From what I understand in meeting with you in Beaver Creek, there's no change there, but maybe just speak to that question as far as you're going to be continuing on with the generative side of the royalty business.
Yeah, we love royalty generation. You've heard me talk about this before. It's some of the best capital that we allocate. It builds phenomenal long-term discovery optionality at the base of the pyramid. When you marry royalty generation with royalty purchase is when the real magic sauce is created, right? So we're putting the astute economic geologists and engineers in the mineral belts around the world, which facilitates the discovery of opportunity to acquire prospective mineral rights, to find royalties that are for sale that are not going through a sales process, even equity investment opportunities. And as you know, we've done a phenomenal job throughout our history making money on equity investments as well. So we cast a broad net. Having these intelligent technical people around the world facilitates us doing a good job of casting that net and finding the right opportunities to act upon. I've always taken a diversified approach on a country venue basis, but also on a commodity basis, looking for opportunities. And that's worked well for 23 years. And you bet we're going to continue our business in that manner.
Well, and I want to get into some of the flagship assets of the Pro-forma company. So for those that are listening in that are maybe on the Elemental Alta side and not as familiar with EMX's royalties, I think a great one to highlight would be Timok, that makes the case study here as far as
Yeah.
why you want to have the generative side of the business. So maybe talk to us about Timok being a cornerstone asset.
Yeah, that's a company making asset. It does speak incredibly well to that concept about the marrying of purchasing royalties, identifying opportunities in the field. We were the first company into Serbia after they westernized. We helped rewrite their mining law, rewrite their concession law, became the first company to be granted exploration licenses in the Timok magmatic complex, which, as a footnote, is Europe's largest historic copper and gold producing region, which, of course, is why it attracts us. And ultimately, we're going to have half a dozen different royalties in that country. Some of those are coming from recent license acquisitions, actually, but combined, this portfolio has got some super meat on the bone. And there's 4 ore deposits that have been delineated on one of the licenses where we have a royalty. That royalty, according to the analysts, is worth over $260 million at a net asset value today. I actually think they're underestimating it a little bit because the discoveries that are going on there are continuing with 12 drill rigs that we see in satellite imagery and from going to the field, identifying those rigs that are advancing these 4 ore deposits, 2 of which are in production, and then the really big ones are forthcoming, and that represents excellent in-ground net asset value that will actuate as cash flow in future years. And it speaks phenomenally to this business model. So we're doing generative work. We're identifying prospective mineral rights in some of the most well-endowed regions of the world. And we find opportunity to buy royalties. We find opportunity to create royalties through royalty generation. And our net expenditure, Shad, for these half dozen royalties that we have in Serbia is around 200,000 Canadian dollars. And the net asset value of just one of the key royalty within that, although the others will become worth more money over time, it's over $260 million. It's already cash flowed to us $16 million and is paying every quarter. And I'll point out that we have a huge amount of respect for Zijin, the very strong operating party there, our counterparty. Zijin has done a phenomenal job of growing within the mining space. And their stock price has 5x'd over the last few years, and they've proven to the market that they know how to build mines. So we toured there recently in March. I must say it was the most modern mining complex I've ever had the opportunity to tour, and I've toured a lot of mines. So that was very good to see. The folks that work at Zijin are exceptionally intelligent and multilingual and are on their game. And that's the kind of counterparty that Fred and I want to have. And so we're delighted with that portfolio, but it speaks volumes, going back to your original question, speaks volumes to the business model.
Yeah, I think it's such a good case study. Look at the return on the investment there, but also it brings up a really important point about the royalty business, the strength of the partners that you can have. You don't have to deploy the people into the field and build those high-tech mines. Your partners do that. And Fred, I want to throw this over to you because it really highlights the strength of another cornerstone asset in the portfolio. Well, actually, two. We'll just talk about them in tandem. Carlawinda, which is a flagship Cornerstone gold asset for the company, has had a big expansion. So it talks to the strength of a royalty partner, making the project even that much better. And then you also just upped your stake in the Laverton royalty, and you have got a quality partner that came in there and acquired the asset with Genesis. So maybe speak to those two Cornerstone royalties and the strength of the partners that you have in place.
Yeah, look, it's the combination with EMX gives us, I think, 5 absolutely standout royalties in Timok, combined Caserones, Carlawinda, and Laverton plus Leeville. So those assets would fit in the portfolios of any of the mid-tiers or major royalty companies without a doubt. And if you talk to the optionality and long-term potential you get through them, it's going to be phenomenal, not in the years to come, but I think in the decades to come. And Laverton didn't get much attention because we actually acquired that royalty. We announced the acquisition of it 2 days before the merger. So it was somewhat overshadowed, but it was a really important deal for us because we already had a royalty on 2% royalty on about half of the ground that Genesis acquired. And the acquisition we made from a private company that had held the royalty for, I think, approximately 15 years. The acquisition we made from them increases our royalty by giving us additional 2% royalty over the whole nearly 4 million ounces that are currently there. And so this is for everyone's benefit. This is in the Laverton Goldfield of Western Australia. It's already host to Goldfields, Granny Smith and Wallaby mines and Anglo Gold Ashanti's Sunrise Dam mines. It's seen the production of many million of ounces over the years. And Genesis recently acquired the Mount Morgan mill to just 30K to the west. And they consolidated this district from one of the Chinese parastatals, Shandong, who had effectively warehoused it for the past 12 years. And so it's a pretty unique opportunity because it is very, very rare nowadays that you would be able to acquire a 2 to 4% NSR royalty over a core part of a historical gold belt in West Australia like that. And to do it with a 4 billion US plus operator in Genesis is even rarer. And so everyone's aware, I think 99% of those resources sit on currently granted mining licenses. Historically was mined over a decade ago, including one of the deposits that in the 1990s, it was one of the top 10 underground gold mines in West Australia, 10,000 ounces per vertical meter, and has had no work done on it for over 25 years. Probably only one of the only assets there. So we are very, very strongly of the view that there is going to be enormous exploration upside coming from that Laverton gold belt going forwards. And currently, although we put it in our top 5 cornerstone assets, it actually isn't producing at all. And I think Genesis predicting first revenue from that in the coming years, 2027, 2028. So that is one of our cornerstone royalties that is sitting as part of an operating mine complex, not yet in production, and gives us a huge amount of organic growth in there and on an asset that should go for decades just based on the resources that are already there. But I think beyond that, when they really start getting into exploration, and because it was warehoused by the Chinese, virtually no exploration in the past 12, 13 years, under $2 million a year, Australian dollars, has been spent on this ground. And that is across many licenses. That is very, very little actual work on the ground. So to have that in an environment where in Aussie dollar price terms, the gold price has almost tripled, again, is pretty unique. So we were very pleased to get the deal done, add it to the portfolio, give ourselves another cornerstone royalty in West Australia alongside Karlawinda. So we have 2 multi-billion dollar operators in West Australia, Capricorn and Genesis, with 2 projects, one in production and one in production, just not from the royalty area yet, that should both have very long mine lives and give us exceptional optionality to the gold price and future discovery.
One, Fred, just a brief comment on the expansion at Karlawinda, just for those that missed it. That's another kicker that you've had and another benefit of holding a royalty with a solid operator like Capricorn.
Yeah, and it's interesting because someone asked us a question recently around organic growth in the portfolio. And actually, if you look at 3 of our 5 cornerstone assets, you've got Timok, which is graduating from the upper zone to the lower zone with orders of magnitude larger production expected. You've got Karlawinda that is going from in 2024, a $5 million a year royalty to we expect from a year's time from today being a $10 million a year royalty because they're doing a 50% throughput expansion. And you've got Laverton that is a 2 to 4% royalty and not yet in production, but expected in the next 2.5 years. So you've got 3 of our biggest royalties, all of which are either going through expansions or getting into the mine plan in the short term that I think are going to deliver really significant growth for us just in that period. And the wonderful thing is it will be at no cost to us and coming at a time where we're seeing really strong commodity prices for gold and copper, respectively.
Well, and Dave, we can't get out of this discussion without talking about Caserones. Caserones is a situation where it's very unique that both companies had a royalty on this great copper project operated by Lundin Mining, but now they've come together into a larger overall royalty when you combine the 2 companies, and this gives the company some good copper exposure, but it's also going through some of the first exploration seen in over a decade, so maybe give us an update at Caserones.
Yeah, I'm happy to. Our combined royalty at Caserones is 1.3% or will be 1.3% upon completion of the merger. And we're delighted. This is another key cornerstone asset. And when you marry it with the ones Fred was just talking about and Timok, that really separates us as having some of the best royalties in the world that are not owned by major royalty companies. If we zero in on Caserones, which is a world-class copper and molybdenum complex, our royalty footprint there is bigger than the city of Phoenix. It's phenomenally sized. And there's a dozen different exploration targets within that. JX Nippon, who was the previous operator and still a joint venture partner on the property, was doing a very good job of producing copper from Caserones, but not doing a lot of exploration. Lundin Mining Corporation, of whom we have great respect, have come in, purchased operatorship of this district, and are putting lots of money and talent into the ground. And they continue to allude to successful drill intercepts at the Angelica Porphyry project immediately adjacent to Caserones, entirely within our footprint. And believe it or not, in-pit drilling at Caserones, finding high-grade breccia zones that they've been advertising in their cross-sections and in their news releases. We're very excited about what's going on here. On a pro-forma basis, we're looking at $15 million a year in revenue coming from Caserones as it sits today. But I believe this is just the beginning. And the net asset value will grow over time. Copper prices will grow over time. And those two multiply by each other. This is a key asset within the portfolio.
Well, Fred, I just had a lot of questions that came in about Tether's involvement and the Elemental team being more on the acquisition front. What does this mean for future acquisitions? What does this mean for the caliber of acquisitions the company can make with the financial backing of Tether to assist the new pro-forma company?
Well, look, Chad, it's a good point to make because we'll come out of this transaction with about 50 million US dollars in cash, and we should be in a position to upsize our credit facility to approximately 200 million US dollars, and that would be fully undrawn. So the combined company, if we have $1 billion market cap today, we would have approximately $250 million of non-dilutive capital we can spend to increase value to our shareholders without needing to go back to the market. So it gives us a really, really strong position to go out there, continue to grow the business. And one of the things that's been, I think, most satisfying is seeing, since we announced a deal and the teams have started integrating and working together, is seeing how many opportunities we can progress in parallel. And some of the EMX team have been on site visit almost non-stop since we announced this deal. And we've been doing in parallel a lot of the work on the valuation and commercial side along with that. So I think really trying to push on all fronts to keep finding the best possible opportunities that we can add to the portfolio and making use of the skill sets across both management teams to really keep that focus in mind of identifying and acquiring high quality geological assets through the form of royalties where we see them.
Secret sauce, Chad.
Well, Dave, I want to give you the final thought on the secret sauce. So, the big picture takeaway, the final things you'd want investors to know about this new combined entity, where you sit in the royalty space, but also the vision for the company moving forwards.
Both companies, if you look at how the analysts have identified our net asset value per share, both companies have been moving up and to the right. And that's based on discovery optionality and production growth within the portfolios. And so as people find more ounces of gold, more pounds of copper in the ground, you multiply that times an increasing commodity price, and that puts both companies in a strong position. You merge the two portfolios together, and that's just pouring gasoline on the fire. And we're super excited. My large shareholders are highly complimentary of this move. And I'll point out on that note that many of our shareholders we share. They're folks that own stock in both companies already. They think it's a great idea to bring this together. And the net asset value is going to continue on a per share basis to increase because of these attributes that we've explained. And the other point I'll make is that now that we're a larger company, it's highly likely that our net asset value premium that we will get, our multiple, will also increase because that's the case with royalty companies. As you move up in market cap, your PNAV multiple increases. So with the PNAV multiple going from approximately 0.8 or 1 up to 1.5, which is a conservative estimate, some of our competitors now are currently trading around 1.8 PNAV multiple. But let's say we go to 1.5 and the asset value as calculated from pounds of copper and ounces of gold in the ground also is moving up. I'll come back to this comment again. That is multiplicative, and that will translate to a substantially increased share price. And that's why we're here. Fred and I's responsibility to the world and responsibility to our shareholders to grow our share price. And that comes from being intelligent and allocating capital astutely and taking advantage of the fact that royalties are just amazing instruments to own.
Well, there you have it, folks. Multiplicative value creation across multiple sectors here. You've got copper growth, gold growth. You've got the growth of the companies finding more ounces and increasing production. You've got the ability to transact and do future accretive transactions. You've got the royalty generation side of the business. You've got all the one-off payments associated with many of the royalties that are not in production but still generating revenues. And you've got a bigger company that can get a bigger value multiple on its PNAV. And I should disclose that I am a shareholder of both companies. And so I fit into that mold you're talking about, where you have a Venn diagram where there's people in one camp, people in the other camp, and a lot of people in the middle that already held both companies. It seems like it was well received in the marketplace, gentlemen, and we'll definitely keep following along with it here at the KE Report. For those of you listening in, if you want to follow along with all the news, definitely click on the links below in the show notes. It takes you over to both the Elemental Altus and the EMX Royalty websites, straight to their news section. Eventually, it'll just be one site and one combined company, and we're looking forward to that day. Gentlemen, thanks for coming on the KE Report, and as always, looking forward to our next conversation.
Thank you, Shad.
Thanks, Shad.